Yo, what's good, YouTube? What's up? Hope you're all having an amazing day. Today's video, we're going to be talking about the different types of sort of exit strategies or trade management, however you would like to call it. And this is sort of something I want to touch on a little more on the channel, in the coming weeks, months, is system building, right? Because when you're building out a system, you need to have rules on when to enter, how you're going to manage the trade, risk management, how to get out of the trade, are you going to leave a runner, how you're going to decide your targets, etc. So I want to talk about different ways to exit trades. So we're going to be getting into that today, something a little different, so it's going to be really fun. If you aren't already, do smash that like button because it does help the YouTube algorithm. And if you aren't already, subscribe for more content like this, as well as follow my Instagram because I do post a lot of trading related things and sometimes just stuff about my life. So without further ado, let's jump over to the computer and let's talk about it.
All right, guys. So here we are. Let's jump right in. So the the first sort of way you can determine when to exit and get out of a trade, which is really popular, and this is something that I also utilize, is you can use fib extension levels. Oh gosh, extension. Okay, whatever. We're just gonna leave it like that. Fib extension levels. So this could be 1.2, the 1.6, the 2 level, right? So these are all very popular Fibonacci extension levels, which basically just means, let's say you're trading a trend and, you drew a Fibonacci and you have your levels here, right? Price comes down, maybe you buy right here, your stop is somewhere. And this is how you set where you're going to take profits. So it might look like here's the 1.2, here's the 1.6, and here's the 200% level, right? So this could be your first target, second target, third target. You take some partials there. Maybe you even want to get out of the trade there, or you want to let it run, get to this level, let it run, get to this level, right? So that's a very popular way to set targets. I use it, works really well, no complaints there, right? But of course, it does depend on your strategy. Not every strategy you can use Fibonacci, because sometimes your strategy might be range bound, right? Your strategy might be trading ranges, in which case this wouldn't work. So let's talk about some alternatives here. So that's number one. That's a pretty common way to set targets. Okay, well, not number one. Number two, the second way is, and this is also super common, super popular, you can use support or resistance, right? So let's say, I don't know, chart looks something like this, I don't know, and you're getting in on, let's say, a long trade like this, right? You're thinking it's heading higher. So how can you set a target? Well, like I said, you could use your Fibonacci thing and then have the levels. But the second way here, you can use support and resistance. So this would be the next level that you would target, right? This would be the next resistance. So you'd expect price to move and try to hit that resistance. And this is where you would take, either partial profits or get out of the trade. And then this would be, this level up here would be the next level you would target. So you can use standard support and resistance. Again, it's going to depend on your system, your strategy, what's going to work best for it. And you could always back test, right? Back test, see which works best for your strategy, right? So those are two very, very popular ways of doing it. Let's look at some other ways you could potentially set targets. So the third way you could potentially set targets or determine where you're going to get out of a trade Because if you don't have a profit target, and let's just say you're buying and you have no idea when you're going to take profits, that's never going to work because it might get up a little bit and you take profits. Well, if your stop loss is down here, that's an alpha risk reward ratio. However, on the other side, if you just let it run, eventually maybe it's you've made made a decent profit, risk reward ratio for the trade's good, but you're like, I don't know, maybe it could head higher. So you keep holding, you keep holding, you keep holding, boom, stopped out at break even, or maybe even stops you out if you don't move it to break even. So you need some targets. You need to set some targets, or else you're going to lose most of your trades, or it's just not going to be a profitable strategy. So you need to have targets so that you can actually back test, have rules, have a system to follow, so that your emotions aren't getting in the way. People get scared, people get upset, people get whatever when they're trading, which is understandable. You can make and lose thousands of dollars in minutes. So you better know what the fuck you're doing. And so yeah, you need to have rules. If you don't have rules, that would be like, I don't know, what would be the equivalent? It'd be like going to a horse race and you're trying to bet on a horse, and your soul, you're just betting whatever looks good. You're like, oh, I like the name of that horse, let's go with that. Well, I don't think the odds of you making money is going to be very high. And if you're trading, for the most part, you're not trying to be a degenerate gambler, and you want to be making money. You don't just want the adrenaline rush. So yeah, you need to have rules, and one of those rules is, when am I getting out? Where am I getting out? Yeah, am I going to leave a runner? Blah, blah, blah. But in this video, we're just going over how to find a profit target, where to get out of a trade. So the third way that you can do this is through price action. So let me just write price action, PA. So the third way you can do it is price action. Let's do a short example here, because I've been doing a lot of long examples. So let's say price is heading down, and who knows, maybe you go short right there. So where are you going to get out of the trade, right? Like I said, you could use Fibonacci. You could use, support level down here. Who knows? But the other way you can do it is just through price action. So let's say you're going short, and you start to see price, sort of bouncing a little bit, heading higher. Well, you could get out of the trade there, right? You only want to trade when market's heading down. That's a way to do it. You can also do it if you maybe zoomed in here on a shorter time frame. You could do it by market structure. So let's zoom in to this little box. So let's say price is heading down here. That's this little wave right there. And then the market headed up higher, right? And then you took a short right there, which would be right here, right? So price starts heading lower like this, right? That's this wave down. Now you're in profit. You sold it right here. That's all great. So one way you could do it here is with market structure, right? Which is sort of price action. They're pretty intertwined. It's basically the same thing, in my opinion. So this is the last sort of higher low, or no, lower high. I always mess that up. Lower high. And so the way you could do it is you set your stop here. So you just keep trailing it like that. And however long it runs is however long it runs. Maybe it keeps going and this thing just heads down. Well, that's going to be a great trade if your maybe stop was right here, right? Amazing trade. But let's say it didn't do that. Let's say price did something like this. Now all of a sudden it made a higher high. Well, granted, it could just keep going down like that. Very possible. But, at the same time, market structure doesn't lie. And it's possible this thing could then go like that and go like that and go like that. And yeah. So you could do it with price action / market structure. on a lower time frame. Again, you could be taking the trade on a higher time frame, but based on the lower time frame price action, you get out of the trade, and that's how you exit. So that is another way you could do it. All right, let's look at the fourth way that you can set your profit targets. So the fourth way you could do it is based on stats. It's based on statistics. It's based on back testing. So stick with me here. The fourth way you could do it is simply by risk-reward ratio per setup. So what do I mean by that? Risk-reward ratio by setup. So every strategy is a little different. Every strategy utilizes different things. Some it's support and resistance. Some it's trend lines. Some it's just price action. Some it's moving averages. Like there's all sorts of different types of entry systems, signals to tell you where to get in. And you need to back test it to make sure it's profitable. So one thing you can do is just say when this setup occurs, maybe you have a moving average or a trend line or whatever it is to get in your trade, you can backtest. Well, if my normal stop has to be here, where whatever it is for your system, what's the likelihood it's going to hit a 1-to-1? Well, if it hits a 1-to-1 and it wins 60% of the time 1-to-1, then that's a pretty decent target, right? You don't need to use support and resistance. You don't need to use Fibonacci levels. It could just be, when I see this setup, it usually moves at least 50 pips 60% of the time. It could just be, like I said, sort of statistics based. What's the likelihood of it hitting a 2-to-1 risk reward? Maybe it's 40%. Well, that's still profitable. So you could do that. You can do, 2-to-1 every trade, same stop, same target, every time I see this setup and it's profitable. It could just be statistics based. So maybe I shouldn't have wrote that. Let's just say stats, right? Stats are powerful. Math is powerful. I recommend you guys start utilizing statistics. Track your trading. Track your strategy. It will give you much more peace of mind, much more confidence to trade, take setups, etc. If you tested it, it works, right? If some guru told you, if you do this strategy, I guarantee you'll be a millionaire in 10 years. I feel like a lot of people would be interested in that. Well, you can do that yourself. Test out your strategy. If it's profitable, guaranteed in 10 years, if you compound and you put in savings and whatever, maybe you'll end up with $1 million or even more with compounding. So, there's a lot of power in math. So I recommend utilizing that. Now, the fifth thing you can do here is a combo of a lot of these. Well, not a lot, maybe one or two. So what you can do is, for example, so what you can do is you could say, okay, maybe you have a trend, right? You have your Fibonacci that you drew. This is let's just say 50. And so maybe you have your extension levels, right? Well, let's say it hits both extension levels. Okay, great. You take most of your profits off. That's your main targets for the trade. But this thing could potentially keep running. So maybe you do that and you take off 70% of the trade, but you leave 30% of the trade running, and you'll determine when to get out of the rest based on price action and market structure. This is kind of what I do a little bit sometimes. If I think there's potential, once it hits my targets, I'll make sure it's a risk-free trade, maybe take some partials, and after that, I'm just going to let it run and see what happens. If it starts making lower lows and it doesn't look good, I'll get out. But if not, it could just keep heading higher, way past your targets for the fibs. So that's an example, or you could do that with support and resistance. If it hits a support level, you can take some partials and then leave the rest to, like I said, price action, or maybe you have Fibonacci levels higher up, whatever it is, Fibonacci extension levels higher up. So you can combine some of these, and this is not the only ways you can determine profit targets. These are the most common and effective ways you can do it. So Anyways, guys, I hope you enjoyed this video. It's a little different than my other ones, but it's really interesting. Interesting topic to talk about, in my opinion. So, with that being said, if you got a lot of value, give this video a thumbs up and subscribe for more content like this. I will see you guys in the next video. Have a great week. Peace.